Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Burke, the Dividend Diplomats. Everybody, we're going to talk to you about 5 dividend aristocrats yielding over 4% today.
Boom, not one, not two, but Bert's had 5 dividend aristocrats, guys. But before we dive in, smash that subscribe button. Give your boys over here some love with the thumbs up on the video screen here. And again, during these volatile time periods, as we just released that earlier video about what we can do during turbulent times, it's still investing in the stock market. It is buying dividend income stocks for less. And Bert put together this solid list of 5 aristocrats yielding over what, Bert?
4%. In turbulent times, they are indeed right now, Lanny, because at the time we're recording this on June 11th, so we're talking about close prices as of Friday, June 10th. S&P 500, man, it did not have a good day on June 10th. That is not at all. The new inflation numbers were released. They were significantly higher than they were expected. Everyone's expecting maybe we hit the top. That was what we've heard over the last few weeks. Hey, inflation may have peaked. It may be cooling. It may be coming down. That CPI index was like not a chance. We were going to keep blowing the roof off of this as inflation rose even higher.
It's wild out there. But it's fun. I mean, again, if you're in that long-term mindset, this is a great time. It's a great time to finally, get back to almost reality, on stock prices. Obviously, we need to get back to reality on gas prices, but that's for different videos here. So these 5 dividend aristocrats, are able to give you a little bit of bang for your buck, in case you're looking for income and yield, with some, higher quality businesses.
Yeah, obviously there are a ton of companies that are yielding over 4%. The reason why we're featuring 5 dividend aristocrats, though, is because we need to have a long-term mindset in times like these. You're seeing turbulent times. You're seeing companies that are having to unfortunately lay off people, that are dealing with the rising costs in different ways. We like dividend aristocrats and dividend kings for that reason, because they've been through tough times before. They've increased that dividend through the dot-com bubble. They've increased it, some of them through the last high inflation period in the early 1980s. We like companies that match our investment strategy because we're trying to build that growing passive income stream.
Exactly. It's all about building that passive income stream on that road and journey to financial freedom, guys. So let's dig in here to the list. Bert, you want to kick us off with that first big hitter?
Yep, it's a company that we have featured plenty of times on this channel over the last 2 months, and their stock price continues to slide. This first company is T. Rowe Price, ticker symbol TROW. Right now, as we're recording this video, they're trading at $114.85. Lanny, how much are they down year to date?
They're down almost 41%, brother. So, guys, they are getting pummeled. They're getting stone cold stunned, Triple H pedigreed, Undertaker tombstone this year. And it's for obvious reasons. The stock market slides, T. Rowe Price slides, because their assets under management goes down, which means less money that T. Rowe Price stands to make.
I know, but what's crazy, though, is even though their assets under management are declining, the last numbers were released, they still have 1.4 trillion under management. So it's not as if there's a small pool of money sitting there on the sidelines.
Wow.
But with this 41% slide, the company is now yielding 4.18% for T. Rowe, which is absolutely wild for this company, especially considering where it was just 6 months ago.
North of 4%. I'm sure Bert's a buyer at these levels, guys. They've been increasing the dividend for over 35 plus years at an average rate of over 11 or over, double digits. And they just did an 11% increase earlier this year. I mean, what a solid, investment company.
Yeah. So T. Rowe at this time, we continue to evaluate it. Their PE ratio is low, as we've talked about in the previous videos. This is the time where you can look at some of these great long-term mindset stocks and see maybe I'm getting them at a very attractive yield. That's what we're going to kind of go through with the rest of these on the video.
So let's slide into dividend stock aristocrat number 2 that we're looking at. Similar industry, Franklin Resources, ticker symbol BEN. They're now trading at around $24, under $25, and their yield is almost at 5% now, at 4.72%. Actually, not down as much as T. Rowe, huh, Bert?
No, they're only down 26.49% year to date. So
So it's down more than the market, but less than their neighbor, T Rowe Price, still a dividend aristocrat with over 25 years of dividend increases.
yeah, their dividend increase wasn't as large as T Rowe. T Rowe, as we said, announced an 11.1% increase in February. Ben Franklin Resources announced a 3.6% dividend increase here in December. So smaller dividend increases compared to their competitor, but their yield is also higher. Their yield is 4.72% for Franklin Resources.
Okay. So let's look at dividend stock number 3, Bert. Let's get into the real estate market. The monthly dividend income payer. We're talking realty income. Oh, baby.
That's right. Everybody's favorite REIT, everyone's favorite monthly dividend paying stock. This company is a legend in the dividend growth community, to say the least. They never are the highest yielding REIT, so we always need to make sure that. But they have pretty sound dividend. They do small quarterly dividend increases. In fact, small is an understatement for some of Realty Income's increases because it is fractions of a penny of their monthly dividend increase pretty frequently.
Yeah, you're right. But hey, over the course of a year, it's usually between, that 3.5 to 5.5% on the growth rate.
Yeah, so their yield's not high. So right now their yield's 4.49%. So they're yielding 4.5%. Year to date, they're down 7.36%. So it's not the largest one. Obviously, T Rowe and Ben are down significantly more. Not every one of these companies on the list are going to be trading down significantly, but they are going to offer great yield. They entered that dividend aristocrat arena last year when they increased their dividend for 25 consecutive years. And they're making moves themselves, Lanny, acquiring one of my most hated companies.
Vera REIT, yeah, they had a big merger, and then they, spun off, it's part of their commercial portfolio as well into it. So if you guys own, you guys probably saw another little ticker symbol in your portfolio not too long after the Vera REIT merger.
No, and I think I'm happy to put Realty Income in this list because I think REITs are going to be in an interesting position over the next few months too, especially as we see what shakes out with interest rates because they're investing in real estate because the impact that every basis point increase on interest rates has on their debt, on their interest expense, and their potential FFO. You might continue to see some values in the REIT sectors if rates continue to climb.
Exactly. So, guys, we're going to head down to the corner of Happy and Dividends here with Walgreens Boots Alliance, ticker symbol WBA, another dividend aristocrat with almost 50 years of dividend increases, almost the dividend king here. I know this company's not sexy at all, but I'll tell you what, they still get a lot of foot traction. They obviously have a nice stronghold on the pharmacy, on the, medication and prescription pickup. I know we actually pick up a lot of our day-to-day items at Walgreens. They have a great coupon system in case you guys aren't using it. But Bert, that yield has definitely swelled up for Walgreens.
Yeah, they're now yielding 4.6%. I guess that's what happens when you're down 21.71% year to date. I mean, you're right though. In the pandemic, Walgreens became a huge part of it as helping distribute the vaccine. They are crowded. The Walgreens by us always has people going in and out of it. I know that doesn't say everything, but it's important nonetheless. They've increased that dividend for 46 consecutive years after their Boots Alliance merger earlier in the 2010s. But hey, the dividend growth has slowed down a little bit, and that's okay here, especially as they work through the merger. They work through some of the debt that came along with it. They only announced last year a 2.1% dividend increase in July 2021. So buckle up, everybody. We're about to see what Walgreens is going to do with that dividend here next month.
Boom. All right, guys, that's Walgreens. Let's stay tuned next month. You'll probably be able to catch that on the expected dividend increases, article. And let's slide in number 5, Bert. I have to let you talk about this one because this is we're talking about an iconic legacy. And they've actually had a pretty good year so far, which is so unexpected. Out of all tech-based companies, when I saw the metrics you put on the screen, I wanted to walk over there, give you a rock bottom and a people's elbow and be like, this can't be right, jabroni.
Well, no, that's why I included them on here. I transparently, I thought it was kind of funny. That of all, there aren't that many aristocrats that are yielding over 5%. This one just made me laugh. We couldn't leave off International Business Machine, IBM. Who needs the declines in the FANG stocks when you have old reliable of IBM? They're actually up year to date, everybody. IBM is up year to date, 0.11%. Price hasn't moved. The price hasn't moved for a long time. In fact, it's decreased from some of their highs over the last few years. But yeah, IBM is up. Their yield is almost 5%. It's at 4.85%. It's just funny to me that they're still one of the highest yielding dividend aristocrats.
You know, IBM guys, IBM. Obviously, their dividend increase again is not sexy at all. Always below 1% lately, especially after they've spun off the one, or they finalized
Yeah,
it.
they did it.
Spun off the one entity. So guys, there's maybe more to come from IBM. Maybe they just start crushing it on revenue growth, cash flow, just where it gets juiced up. I mean, we'll have to really see what IBM is all about with this cloud computing.
Yeah, I think it's funny to me, but it's worth noting because the yield is so high right now, and their performance is just such a it just doesn't match what's going on with the rest of the market, especially in the tech sector. Let's summarize them here. Again, these are 5 dividend aristocrats that are yielding over 4%. Number one, T. Rowe Price yielding 4.18%. Two, Franklin Resources yielding 4.72%. Three, Realty Income yielding 4.49%. Walgreens Boots Alliance yielding 4.6%. And International Business Machines yielding 4.85%.
All right. The question is though, Bert, which one's the best one on this list that you'd consider adding to your position? Because I know outside of Ben, you own all of them.
Yeah, no, that's fair. And again, I think that's important. We didn't run each one of these companies through the stock screener yet because we're not necessarily saying that all of these are stocks to buy at the moment. I'm sure everyone's going to have plenty of opinions about why they're not buying IBM in the comment section below, which we expect because we're not necessarily buying them either. Got to highlight them though because they have such a high yield. But I'm going through the list, thinking through this for myself. T. Rowe Price, great, right there. That's an easy no-brainer for me. We own at T. Rowe Price. We're going to keep building in lowering our cost basis. Especially in my wife's portfolio, who started building it early in 2022 when the stock price started falling. Nibbling, adding one share here, there isn't a bad thing. Truth be told, Laney, Realty Income, though, I'm just going to keep my eye on them from a REIT perspective. I know you've been buying REITs a lot recently. You've been talking about it in your purchases with Store Capital. You had apartments that you then subsequently sold to buy. I can't remember the name of it. I just know the ticker is BRT. I can't remember the
RT Apartments. Yep, that's
Yep.
it.
All right. It's that simple. BRT. I mean, the REIT sector could be interesting if you pick the right ones and you pick some quality investments. Walgreens, again, I started initiating Walgreens a year or two ago, so this might not be a bad time to keep lowering my cost basis by nibbling a few shares here or there for them. And lastly, Franklin Resources. You're right. I don't own them, but you know what? Maybe we should consider looking at Ben and doing a deeper dive in them to see if they are stock to buy. That might be a good article or a future video to do here on the channel, especially with the yield closing in on 5%.
Oh, I love it. I dig it, guys. And again, I would argue, yeah, the T Rowe's looking nice. Keep your eyes on Realty Income. If they start, approaching that 5% yield, don't sleep on Realty Income. Again, you own them, you own real estate, and you get a monthly check for being a landlord without being a landlord.
Yeah, that's nice. No, hey, the pipes have bursted. Can you come here and fix this? Hundreds of dollars of checks later, working through that.
Exactly, guys. So tell us what you think the best one is on this list. Tell us how many of these dividend aristocrats that you own here. What are your other favorite dividend aristocrats as the market is getting crushed, down again about 6% for the week ended on June 10th. If you haven't already, please subscribe to the channel, hit that notification bell so you don't miss Bert's lovely face talking about dividend stocks. Give this video a nice thumbs up. Be any other parting words?
No, it's kind of what we had in our last thing. So I guess technically, yes. Let's just keep buying income producing assets. Let's keep growing our passive income. Let's reach financial freedom. Let's do this in good times and bad times. Guys, just stay consistent. Let's go.
That was Bert and Lanny from the Dividend Diplomats. Over and out.